Welcome to the Skilled MBA Finance Case Study Series. In this edition, we spotlight Prescient Investment Management and its bold pivot towards sustainable finance. Prescient's strategic shift marks a defining moment in South Africa's investment landscape. By developing a proprietary ESG scorecard tailored specifically for the South African market, they are not only enhancing transparency, but also redefining performance metrics through the lens of environmental, social, and governance priorities. This initiative reflects a growing global consensus. Long-term value must be aligned with responsibility. Prescient's approach positions them at the forefront of ethical asset management, blending purpose with performance. Prescient Investment Management developed a proprietary environmental, social, and governance scorecard tailored for the South African market. This framework integrates environmental, social, and governance factors into investment decisions, enhancing their market positioning. The scorecard's creation involved rigorous quantitative analysis, ensuring it aligns with local regulatory requirements and investor expectations, setting a benchmark for responsible investing in emerging markets. In September 2022, Prescient Investment Management faced a pivotal moment. Investor demand for responsible investments surged, regulatory pressures for environmental, social, and governance integration intensified, and the competitive landscape shifted towards sustainability. Recognizing environmental, social, and governance integration as essential, Prescient Investment Management aimed to transcend traditional financial analysis to maintain market relevance and meet client expectations. South Africa's unique market dynamics, characterized by high inequality and governance challenges, demand distinct environmental, social, and governance considerations. Limited environmental, social, and governance disclosure and inconsistent reporting standards further complicate the landscape. While investor sophistication is growing, there's a clear need for a locally relevant environmental, social, and governance framework tailored to address these specific challenges rather than relying solely on global models. PIM developed a proprietary environmental, social, and governance scorecard to address the lack of a universal model for South Africa. This scorecard balances local relevance with global standards, ensuring consistent evaluation across companies. It incorporates South Africa-specific social and governance factors, enabling quantitative integration with existing investment models. Our proprietary scorecard development began with an extensive review of global environmental, social, and governance frameworks, adapting them to the South African context. We identified reliable environmental, social, and governance data sources and established a robust data collection methodology. A weighted scoring system with sector-specific materiality adjustments was developed, followed by rigorous testing against historical performance data to refine our scoring methodology. Our methodology systematically measures environmental, social, and governance factors, integrating them with quantitative models for consistent application across investments. This approach focuses on materiality and financial relevance. Our framework aligns with our investment philosophy, emphasizing measurable outcomes and transparency, ensuring clarity and trust for clients. The Environmental, Social, and Governance Enhanced Equity Index is PIM's inaugural environmental, social, and governance-focused product, aimed at sustainability-conscious institutional investors. It seeks market-comparable returns by systematically excluding poor environmental, social, and governance performers and controversial sectors. The fund overweights companies with strong environmental, social, and governance profiles, ensuring sector balance, and evaluates both financial returns and environmental, social, and governance impact for comprehensive performance metrics. Navigating environmental, social, and governance integration challenges involves addressing data quality and availability issues, particularly due to limited environmental, social, and governance disclosure among South African companies. This necessitates alternative data sources and estimation techniques. Additionally, determining impactful environmental, social, and governance factors requires extensive research and sector-specific analysis. Achieving internal alignment demands strong leadership commitment to ensure consensus across investment teams on environmental, social, and governance importance and implementation. Chief Executive Officer Cherry Dyers offered strategic vision and resources, while Chief Information Officer Bastian Teichgräber integrated environmental, social, and governance into investment processes. Environmental, social, and governance specialists crafted the technical framework, and portfolio managers applied environmental, social, and governance insights in security selection. Cross-functional collaboration was crucial in transforming responsible investment from vision into actionable strategy. PIM's Environmental, Social, and Governance Enhanced Equity Index showcased superior sustainability metrics compared to traditional portfolios. This approach maintained competitive financial performance, proving that integrating environmental, social, and governance factors can enhance both ethical and economic outcomes. The results underscore the effectiveness of PIM's proprietary environmental, social, and governance strategy in achieving responsible investment goals. PIM's proprietary environmental, social, and governance approach attracted Rs. 320 million in initial assets, drawing significant institutional investment in the first quarter. Client satisfaction reached 85%, with high approval for transparency and methodology. The strategy earned 4 industry awards, highlighting innovation in responsible investment. This positive reception validated PIM's decision to develop an internal environmental, social, and governance framework. Prescient's model emphasizes the need for market-specific environmental, social, and governance frameworks tailored to emerging market challenges. It showcases how data-driven environmental, social, and governance integration aligns with quantitative investment disciplines. Additionally, it underscores the importance of cultural change within organizations to genuinely support environmental, social, and governance integration, ensuring that responsible investing is both strategic and effective. Environmental, social, and governance is not just ethical, it's strategic. Local context is crucial as market-specific frameworks address unique challenges. Quantification is key for effective environmental, social, and governance integration, aligning with investment disciplines. Leadership alignment is essential for authentic environmental, social, and governance adoption. Prescient's journey shows that environmental, social, and governance and performance can coexist, embedding considerations into data, discipline, and decision-making processes. Thank you for joining us on this insightful journey. For more insights into environmental, social, and governance strategy and sustainable finance, explore our case study series. Contact us at support@skilledmba.com or visit skilledmba.com for further information.